What if I told you that the market respects a hidden sequence found in nature? From seashell to stock chart, this strange code shows up and price doesn't bounce by luck. It bounces because thousands of traders are watching the exact same levels. It's called Fibonacci. Watch this video till the end. It could be one of those videos that will transform your trading journey. Hello traders, welcome to Finspoke channel, where we break down trading, money and mindset into simple practical lessons. If you are serious about winning financially, you are welcome to the family. Hit that subscribe button if you are coming across this video for the first time. Tap the notification bell. Don't forget to give this video a like and share it so that other traders can see it. Let's get into the business of the day. Fibonacci is a tool traders use to find where price might reverse or bounce during a trend. In this video, I am going to explain it step by step, how to use this Fibonacci, the numbers that you should pay much attention to, and the psychology behind the trade. I will explain how this Fibonacci strategy works, so you can go and backtest it on your own and trade with them confidently. I will also by the end of this video show you how to use this Fibonacci retracement to get a sniper entry or high probability trade. Watch this video till the end, because it's going to be one of the videos that you come across that will help refine your trading journey. Before we dive in, I want you to take your mind back to the fundamentals of the market structure. Whether you are trading Forex, crypto, gold, stocks, or indices, any of these financial market, if you notice, you see that price moves in waves of impulsive and the retracement waves. Price makes something like this. This is for an uptrend market. Now, these waves, this push up, down that you are seeing is caused by the behavior of the market participants. And who are the market participants? They are the buyers and the sellers. They are the market participants. So here you see the buyers, here you see the sellers. The moment the market failed to make a higher high and higher low, you are looking at the opposite direction. That means the market has changed character. It wants to reverse. There's a possible reversal. So if you are monitoring the market or watching the market, that is where these two comes in. When the market fail to produce higher highs and higher lows. you are likely going to use this too. That is for an uptrend. And the same is applicable in a downtrend. And once that happens, next is to draw your Fibonacci. And when you want to draw it, just as I did here, you start from the lowest point where the move started and end it at the highest point where the move ended. What are you trying to do? You are trying to find the possible point where the market could bounce back, find a support before continuing. So this is where this tool is more effective, either in uptrend or in downtrend. The Fibonacci retracement is more useful or more valid based on practical experience on trending markets, either in a reversal trading market or in a continuation trend. When using this tool, this Fibonacci tool, pay special attention to these numbers. The 382%, 50%, 618%, and the 786%. They are the most useful numbers and where you likely get a trade gets to and the pullback ends. Now, these ones I put in this box. We call it the golden zone. That is the 50% and the 618%. That is where you get most sniper entries. But I will explain more because just seeing it at the 50% and the 618% is not enough. You wouldn't want to enter the market blindly. By the end of this video, I will tell you a secret on how to get high probability trade or sniper entry around this zone, the confluence that makes it strong. Watch this video to the end and don't forget to share it. Leave a comment in the comment section and subscribe if you've not done so. When you open your chart, if you can identify when a pullback ends and where a new strong move begins, it will help you make good profit in trading. You can get the best chances of buying for an uptrend or selling for a downtrend using this Fibonacci. These levels are levels that have high potential to cause reversal. Now, this 786% retracement or pullback work best with pairs that makes this deep pullbacks. Let me say this before we dive into the chart. In a trend continuation setup, you should only use it when market direction is clear on the time frame you are working on. The psychology behind this is this. In an uptrend, there is a high probability that price will break the swing high instead of breaking the swing low. But if it does otherwise by breaking the swing low, it could indicate a trend reversal. So we expect a retest before the reversal. You will see all of this in a chart as we dive in. All right, when I was explaining a market structure, I talked about momentum in the market. Right, I talked about momentum in the market, and this is it. So this is buyer's momentum, and this is strong momentum. You can see that the candles, they are very big. So we have more of the activities of the buyers here and little of the sellers. That is, sellers stepped in here and buyers continued. If it to be a trend, we said that the market is actually moving up and there is a pullback, which is the presence of sellers before it continued. So this is actually the impulsive move to the upside, a retracement or a pullback. If you understand your market structure, we have few sellers and more buyers. And because we have few sellers, they will raise the price. That's the psychology here. They have more control because if they don't sell, buyers won't buy. Just like in our economics, we say that in a situation like this, we see much money chasing few goods. So we have little sellers and more buyers. More sellers stepped into the market, and that is why the price started coming down. That's the psychology behind this. So I said that whatever you are seeing in the market, the actions, the waves you see in the market is being caused by the behavior of the market participants, which is the behavior of the buyers and the sellers. What happens in an uptrend is just the opposite of it repeating itself in the downtrend. Here we noticed much presence of the sellers and the few presence of the buyers. So when we have more sellers than buyers, definitely the price will continue to fall. So it is this imbalance between both parties when it continues. Like when the pattern continues to repeat and price continues to or rally in a circle. This is what you see in an uptrend, making higher highs, higher lows, or you see in a downtrend, making lower lows and lower highs. That is the wave you see. This is the psychology behind that waves. So you use this tool in trend continuation, and you can also use it in reversal setup. Market is making higher high, higher low, higher high, higher low, higher high, higher low, higher high. But we want to see the possible place, since we've discovered that price is being rejected here. Definitely there's going to be a little pullback. So we want to know, where is this pullback going to end, or where will it get to? And market will start gaining momentum again or start pushing up, or it will reverse. Grab your Fibonacci. This is where the move, this particular move started here. So you place it from the lowest point where it started, the move started, and to the highest of the move. That's the swing low and the swing high. Okay. Now looking at this, for this particular pullback, it ended, this is a historical data now. So when you want to apply it after back testing, you're going to apply it in a current trade. Okay. So you just know that when you are using it on a current trade, you have at the back of your mind these three zones, mostly 0 0.382, 0.5, and 0.618. These are areas where you are expecting for price to react with price action candles as a confluence. That's one of the secrets I said I will tell you as you continue watching this video. So these are the areas you are expecting the price to bounce back or for the pullback to get to, and it will reverse. And you want to enter trade around that zone. So for this, the pullback ended around this zone. That is 0.618 or 618%. Okay. So if you are to take the trade, you would have set your limit order around this zone. Now, when a market, when price reacts around this 0.5 and probably this 0.8, that is, it reacts or reverse in a previous support zone. In a previous support zone, it is an indication that the trend is getting weak or possible reversal. That's what it shows if the pullback falls around previous support level. Now understand that the fact that that place or the levels where this price bounced, they are support zones. Those areas act as support zone for the price to continue its movement. Now, if we are going to find a scenario where the pullback is around this 0.3 or the 382%, such scenario, we say that the trend is a strong trend. Is a small pullback. A small pullback is within this range, 382% and 0.5%. That is a strong pullback. That is a strong trend. But for a weak trend, signaling loss in momentum or possible reversal is always around this 0.5, 0.6. Sometimes, depending on the pairs, you can get reversal around this 0.7. There are pairs that are good at deep pullbacks. There are pairs that are good at deep pullbacks. That is their behavior, that is their character. And there are some other pairs that their pullback is always within this 0.5, 0.6. And there are some that their pullback is always around 0.38. Now, this is where price was rejected. And it had a push down. Like I said earlier, if the pullback is not up to this 0.3, don't take it as a pullback. If you had taken this as a pullback, you would have lost your money. That's the truth. It didn't get to 0.3, so you count it as a single leg. So what it did here was just to push down a little bit, came to retest this zone. This is a retest. This particular one is a retest now. It came to retest before it pushed down to get to this 0.8. So if you are to enter a trade, you take your trade around this. It pushed up, pulled back, and now pushed up. You can see that it got to this pullback before it finally started pushing down. The trade actually reversed if we continue. So this is where the move started and this is where it ended. This is a retest before the pullback took place. This is actually a weak trend, or this is how the setup would look like. If you look at this, this is 4.17 risk to reward ratio. Look at it here, 4.17. And if we are to measure by pips, you could have gained that's 97.9 pips. Now, depending on how many positions you opened, so you can see that is a very good trade. One, when it gets to this place, there was a rejection. You see this rejection candle. So this is where price action comes in. Price action candles. So price reacted here. You need to watch this. This move started here, got to this place, and we had a pullback at 0.382% before it pushed up. Like I said, when we have pullback around this zone, between this zone and 0.5, it always signal a strong trend. You can see the move. When you try to look at this, you see that this is 9.8 risk to reward ratio, about 3,448.89 pips. This is Euro USD. There are a few things I want you to note when you want to place a trade. First, you ask yourself, where is the price coming from? That's the question you need to ask yourself. Where is the price coming from? And how much time or how much room or how much space does it have to continue before reaching an important zone in front of it? I'm not going to teach about zones and mid zones here, but that will be a separate video. Please, if you want me to make a video on zones, key zones, mid zones, or trading in the mid zone, drop it in the comment section. Or if you have any video that you have in mind, just suggest in a comment section. I will sit back and read the comments one after the other. It will help me to know the kind of video to push out there. Now, I want you to also understand that when price tap into the higher time frame demand or supply zone or key zones, the struggle or the conflict between the higher time frame and the lower time frame is what makes the price to range or consolidate for some time before it actually pick up. If you want to know more about this, watch this video, how to read candlesticks and how I enter trade. Watch that, go and watch that video. When price enter the zone, you don't just jump into the zone. The right timing matters. So this right timing is actually this conflict between the lower time frame and the price tapping into the higher time frame. And this is what caused that consolidation. The consolidation, the grabbing of liquidity. The market participants or the fight between buyers and sellers. So they must agree so that price can push to a particular direction. If there's no kind of understanding, the market will be ranging. So if you always want a winning trade, wait for a good setup. Someone asked me, does it mean that it's only one trade that I take for it part time? And I answered, yes, sometimes I take just one trade, but inside that one trade, I might open more than one positions. These are two different things. Wait for a good setup. If you wait for a good setup, your wins will always be bigger than your lose. Take, for instance, this. Look at what you stand to win. Just look at your win rate for just one trade. This is 9.8, your risk to reward. If you get a trade at 3:1, that's a good trade. 4:1, that is a good trade. Okay? But this is what patience will give you in the market. So if you want to get a good setup in the market, you need to be patient. So the secret to get a sniper entry or high probability entry comes in combining Fibonacci, market structure, and the price action together. This 618 level with a pin bar is a strong confluence. 382 level with also a pin bar is a strong confluence. And the pin bar or the engulfing candlestick, these are price action candlestick. Take time, watch this video, how I do top-down analysis starting from higher time frame. Watch best price action trading strategy. These three videos will help you understand this. These things are knowledge, and the moment you grab the knowledge, it lives with you. So sit down, watch the videos from beginning to the end. You will learn how these things work. These two, price action, market structure, they will help you. If you can be patient in the market, with the market, they will help you not just get a sniper entry, but a high probability win trade. High probability means that the chances of that trade playing out is always there. Now, when you want to place the trade, depending on the broker, you can give spaces for something like 2 pips, or at most 3 pips, because of spread, so that the price don't get to that place and they won't pick your order. These ones are the ones that comes with experience. So you consider, adjusting 2-3 pips depending on the broker you are using, so that the moment the price enters that zone, it will pick your order. To get high probability setup and a sniper entry, you need to combine the Fibonacci tools, market structure, and price action together to get a quality setup. To learn more about price action, watch this video on best price action. And to get more understanding on this, you watch how I do this video, how I do top-down analysis, starting from higher time frame to the lower time frame. And for this price action candlestick, to understand it more, watch this video, how to read candlesticks and volume in trading. These videos will help you gain proper insight on how to gain a good and quality setup that will help change your trading journey. If you are coming across this channel for the first time, please support by subscribing, share this video, give it a like, and leave a comment below. I also run a coaching session. If you need help, if you want to win in this industry, whether you are trading crypto, Forex, stock, I have a coaching session where I will hold you by your hand and show you how you can make money in this industry and show you how you can trade like a pro, even if you are a complete beginner. If this video has helped you, kindly share it. Subscribe if you have not done so. Hit the bell icon, leave a comment below, and share it with your friends and other traders out there. Thank you for watching till I come your way again.